I have always been a strong proponent of the idea that YouTube is a great platform since it gives smart, well-prepared, hardworking people the opportunity to make public their ideas, their work, and to spread them in a way that it's free, that it's accessible, and that it's easy to navigate through, and so on and so forth. However, I am sadly enough, I have to admit that sometimes this doesn't hold true, and today we're going to look at one of these cases where people use this nice platform to spread ideological propaganda that really doesn't serve any purpose other than misinforming people and leading them to the conclusions that are wrong, and that someone that truly cares about whether their beliefs are true or not should absolutely not accept. And don't get me wrong, I don't want to criticize anyone for being wrong, slightly wrong on one specific thing or anything like that, because I think we all make mistakes, and it is a good thing to be wrong so that you can be corrected and you can improve your understanding of things. However, when it gets to the sort of videos that I'm going to be commenting, and particularly this one by Stefan Molyneux, who is already known for presenting a flawed theory of morality, for not being too friendly to women and to some minorities, and so on and so forth, these types of videos are simply propaganda. There is not even an intention on their part of being accurate. It's just spreading direct nonsense. So this does not in any sense, is not justifiable in any manner. And even though someone might be wrong at some points, this is not justifiable, and this is the kind of thing that I'm going to target when I criticize. So today we're looking again at a video by Stefan Molyneux, who made a couple of months ago this comment on the 2008 crisis, which I believe is a crisis that is very related to a crisis of profitability, even though it had a financial trigger. So it is okay to call it a financial crisis, I guess, but I don't just want to make it all about the financial aspect. However, today we're going to be commenting only on the financial side of things, since this is what Stefan Molyneux speaks about. And we're going to be looking at his argument, which is absolute nonsense. So before I begin, however, I want to make a small insight into his introduction. So let's see his introduction to see what exactly he's going to deliver in this video.
All right, so let's real quick run through the true cause of the 07-08 financial crisis. Pretty easy to understand intellectually, kind of hard to process emotionally, but we kind of need to grit our teeth and get through it. So what really happened?
So according to Stefan, what we are about to witness is an accurate, fact-based, scientific-minded approach to the 2008 financial crisis. So let's see exactly what this accurate description of the crisis is.
Well, starting in the 1970s, and particularly accelerating under Bill Clinton and Andrew Cuomo, the US government forced banks to lend more and more money to unqualified blacks and Hispanics. Why? Because home ownership rates among blacks and Hispanics lagged behind home ownership rates of whites, of East Asians, of Indians, and of Jews, and so on. And so, what does the left always do? Well, the left says, well, anytime there's a group disparity, it must be the result of white bigotry, white racism, white privilege, you name it. Therefore, because banks are lending less money to blacks and Hispanics for mortgages, the banks must be racist, so we've got to put the DOJ threatened legal action gun to their head to force the banks to lend to blacks and Hispanics. Now, if you normalize by income, by length of job, by educational attainment, and by average IQ differences, the differences all vanish. But of course, they don't want to talk about that kind of stuff. They just want to force the banks to lend to blacks and Hispanics. And so the banks did, against their will, against their better judgment. And this is where you got the so-called liar's loans, where you fill in your own income, it's unverified and so on, because they had to hit the numbers mandated by the government, or they were going to face potential prosecution from the DOJ. Now, of course, the government not only threatened the banks, but also bribed them with the promise of a bailout, implicitly or explicitly, should things go wrong, which of course they inevitably did. And you can see this because if you look up the mortgage defaults after the crisis hit, it was disproportionately black and Hispanic, which was incredibly destructive to the black and Hispanic communities, by the way.
So here is, according to Stefan, the main, if not the only, reason for the financial crisis, which, as expected, completely exempts those financial institutions that lend money to people that would not be able at any time to pay their mortgages, especially these adjustable rate mortgages that started with low teaser rates and then skyrocketed to very high rates. And so these people don't actually have any fault. It's all about them being passive agents that just take orders from the evil government that is the cause of everything. So we say again this simplistic narrative that comes as no surprise, to be honest. So to recapitulate, according to Stefan Molyneux, the explanation is that the government, especially under the Bill Clinton administration, had somehow the wonderful idea of forcing the banks to lend to poor families, especially African American and Hispanic families. And the reason for this is because the government is it's formed by a group of soft left-wing social justice warriors that fail to understand the reality, the cold reality that these Hispanics and black African Americans, they are just biologically and naturally predisposed to be poor and to be financially unsuccessful, and thus, because they fail to understand this, they force the entire system to give them certain loans, to give them certain money that, of course, because they don't know what they have to do with that money, they somehow become broke, and so the entire system falls along with them. And then the fault is that these leftists don't understand the real natural biological laws of race, which, even though they are discredited by the entire scientific community and are only present in those pseudo-scientific individuals that normally go to speak to pseudo-scientific places like Prager University, even though this is the case, they still try to do it, and this is why it failed. This is why the entire economy failed. So the main idea here is therefore that the government, being as evil as it is, wanted to give greater access to African American and Hispanic families, which were the ones that were and still are the families in the United States that are doing worse because of structural economic issues that have historical roots. But I mean, for Stefan Molyneux, all of this doesn't really matter. But the idea is that the government, being as evil as it is, wanted these families to have access to the American dream, which is widely celebrated. However, only a few can have it apparently. And so, because they wanted to provide them with a primary necessity as having a home, having a roof that gives you protection they wanted to make this possible, but they failed to understand natural laws, and so the entire system fell. This, of course, is a very simplistic story that is absolutely wrong, and we're going to see why. But let's look first at the different requirements that this story would need in order to be accurate, in order to have some empirical ground. Because Stefan Molyneux doesn't present any data, doesn't give any sort of backing up of what he's saying there. He's just flat out saying it, not giving any data, and pretending that there actually is empirical support for it. So let's look at the two different requirements that would be needed to be met in order for this account, which I argue is wrong, to be in fact true. So the first thing that he would need to prove is that this boom in subprime lending happened exactly after the 1970s, and especially during the Bill Clinton administration, before 2001, and that this was in fact what made, these policies were in fact what made subprime lending increase to the extent that it did. Now, did this happen? It did absolutely not happen, and we're going to look now at graphs to prove that in fact this massive lending in the subprime market occurred during the Bush administration from 2001 to 2008, and that this in fact happened not because of pressure of some left-wing government, and I'm going to argue that Bush was not pretty much a left-winger. This did not happen because of government pressure, but because it was very profitable. So let's look at the evidence for this. So the first table that we're looking at is this one that tells us the value in amounts of US billions of dollars. It tells us the value of these mortgage market originations for all of the categories, the conforming, jumbo, subprime, etc. But we're going to focus especially on subprime, since this is where the main problem lies. And we are going to see how before 2003 particularly this value was pretty high, to be honest, but it pretty much was stable until 2003, when it started skyrocketing, and it in fact became $600 billion by 2006 of mortgage originations in the subprime market. Now this did not happen during Bill Clinton administration. This only happened with Bush. So we already have here evidence that Stefan Molyneux was wrong about what he said, but we're still going to look at more evidence. So this second table focuses only on subprime originations and securitization as well from 2001 to 2006, where we can see again the same story, and we can see how the percentage share of all the originations went from 8% to 21.1% in 2006. This is quite a big increase, and it especially happened again after 2003, coinciding not with some leftist social justice warrior government, but exactly the opposite. And this table not only tells us that the amount of subprime loans that were made exponentially increased from 2002 to 2006, but it especially lets us know how profitable this was, and that in fact these companies were not really forced by any government, but rather were making them to profit from them, since the percentage of them that were securitized, and for the ones that don't know, securitization is the process by which you take these sorts of let's say loans like mortgages and so on and so forth, and you pool them and you divide them into different categories, and you then make them into more complex financial instruments, CDOs, squared, cubed CDOs, and you sell them in the market to investors, and this is really where the profit making was. And so these companies securitized by 2006 80% of the subprime loans that they were making, which meant that they were obviously making them not with the intention of just meeting some requirement of the evil government, but of actually selling them in the market and getting the immense profits that they were yielding at that time. And so now that we know that this first criterion of the time frame of the rise in subprime lending, this first empirical criterion hasn't been met, let's look at the second criterion to see if he can have any case in favor of it. So the second criterion would be that most, or if not all, of the mortgages of the subprime loans that were made should have been made, in fact, by those banks and financial institutions working under these affordable housing programs, and that all, if not most, of these of the defaults, of the delinquencies that occurred, should have happened in these government-sponsored enterprises and in these loans that were made by banks working within this affordable housing system. And for this, we're going to look again at other tables and other graphs, which are, and I'm already going to advance this to you, are going to show how this in fact was not the case. Let's look them, however. So as we can see in this first table, the amount, the share of those mortgages that were government backed during the housing bubble, during this boom of subprime lending, was in fact decreasing. So from 2003 to 2007, it decreased immensely, which meant that in fact most of this lending, most of this shady lending, was being done by non-bank financial institutions that were not in fact sponsored by the government or by these programs. In fact, most of these institutions did not let their clients know that there were other programs that had smaller rates and that were more affordable, because they wanted those mortgages for themselves, so that they could then securitize them and sell them in the market. Furthermore, this other table also tells us that the delinquency rates for the government-sponsored enterprises, which were Fannie Mae and Freddie Mac, were in fact immensely smaller than the delinquency rates of those private market subprime loans. And I mean, this makes complete sense, because the government-sponsored enterprises, at least through most of the time, and these programs were made not to create more risk, but rather to make these families be able to afford their houses at lesser risk. However, the private banks, the private institutions, did not really care that much about risk, because they were confident that house prices would continue rising. So in fact, they were just leveraging up in order to provide more loans and get more profits, because leveraging up means more profits if the asset values continue to grow, etc. However, and as it ended up happening, once asset values start declining, high amounts of leverage completely deplete the capital storage and ended up making a good functioning bank they end up turning it into an insolvent bank, which is what happened. However, these delinquency rates, as we can see here, were a lot higher in these non-bank financial institutions that were not sponsored by the government. And unlike what Stefan Molyneux has said, most of these banks really did not have any implicit guarantee by the government. Fannie Mae and Freddie Mac did have it, in fact, but Lehman Brothers, for example, did not have it, and this is why they went bankrupt in the end, because the government was unable to do anything for them. And as with many other lies, there is in fact some truth to what he's saying, because it is the case that in the 1970s, and exaggerated by the Bill Clinton administration, there were some affordable housing programs that were implemented, and there was this sort of motivation to lend more to Hispanic and African American families, because they were pretty much they were segregated, and they didn't have access to all of these luxuries and all of these even primary necessities that we take for granted. And this is by no means any evil, and in fact these programs did many good things. Let's look, for example, at what these two authors, Colin MacArthur and Sarah Edelman, say in the article from which I took these two last graphs. So they speak about the Community Reinvestment Act, which is one of the acts that Stefan Molyneux is probably referring to, and they say that this Community Reinvestment Act, or CRA, is designed to address the long history of discriminatory lending and encourage banks to help meet the needs of all borrowers in all segments of their communities, especially low and moderate income populations. Congress passed this law in 1977 to provide lending incentives to support civil rights, anti-discrimination legislation, and in response to local bank closures and unjustifiably low levels of lending in certain communities that shut out entire populations from the benefits of home ownership. The central idea of the CRA is to incentivize and to support viable private lending to underserved communities in order to promote home ownership and other community investments. The law has been amended a number of times since its initial passage, and has become a cornerstone of federal community development policy. The CRA has facilitated more than $1.5 trillion in private lending to underserved communities, greatly assisting the development of affordable housing for low and moderate income groups, as well as broader community economic development. So what they were trying to do is not just to give loans to people that were absolutely not going to be able to pay for those loans. This is what private institutions did in order to sell those securities backed by mortgages. But what they actually had in mind is to give mortgages to those families that could potentially pay back those mortgages, but just did not have the chance because of discrimination or because of other issues that have been haunting these two communities for the entire history, essentially, of the United States. So the idea that these programs were not only one of the main causes, but in fact the sole cause of the entire crisis is nonsense, and it's not backed by any serious economist. And I want to make this clear: if there is some consensus by economists on this issue, is that this is not the sole cause of the financial crisis. And for Stefan Molyneux to just come here with no data, with no backing whatsoever, and just claiming this in front of a very big audience, because he's a quite influential person, just means that we are subject to all of this misinformation that is so easily put online, and we have to be careful with these kinds of things. And again, it is our task to make sure that these things don't happen, that some person cannot just come in and completely misinterpret everything. And I want to make here clear that my position is not that the government had no fault whatsoever on this crisis, because I do believe that in fact it did a big amount of things that were wrong. And in fact, one of the main things that I think went wrong in this crisis, which is also defended by economists like S.Blinder in his book After the Music Stopped, where they suggest that one of the main villains, if you want to call it like that, of the crisis was that there were no regulators, that all of this subprime lending, that all of this leveraging up was being done without any sort of regulation whatsoever, and that in fact regulators were encouraging in some cases this sort of behavior, because most of them were free market, like Alan Greenspan, were free market, were supporters of the free market, and they believed that these banks should not be controlled by any means, because this is the mentality during periods of boom. The mentality is for banks to bribe and to give incentives to politicians to not regulate them, because, well, in the end everyone is profiting from this until only them benefit from it, and the rest have to suffer the consequences of a major economic catastrophe like this one was. So it is in fact true that the government had some faults, and it is in fact true that the government gave a lot of incentives for not only government sponsored but also private entities to give loans, even when these loans weren't that they were pretty risky, but this is in no sense the main cause, or even the only cause of the crisis. There were many other causes, and so let's look at these causes. For example, let's say, for example, the incentives of the brokers. So these mortgage brokers that were giving these subprime loans, they were just passing them through. They didn't have a stake in whether that loan failed or not, because they just were paid in terms of how many loans they made, not in terms of the quality of those loans. And all of those loans, again, were being securitized. They were being pooled, and they were being trenched, and they were being sold away. So sometimes they had absolutely no bearing whatsoever on, in fact, not only sometimes, but most of the time, they had no stake on whether these mortgages were going to fail or not. They were just gaining all of their profits from it. They were just being paid all of their rates and so on and so forth. And this incentive is really what made this happen. The incentive of profit seeking, of profit making, especially in a global market that was putting a lot of influence on the US housing market because of this concept that Ben Bernanke, chairman, who was the chairman at the time of the Federal Reserve, called the savings glut, the international savings glut. There was a huge amount of saving coming from the outside, especially from Asia, that was being canalized into the housing market of the United States because it was profitable. It was very profitable. So this is what lies behind this big rise in subprime lending and so on. It's not this simplistic story about the government being full of social justice warriors that apparently they control the world, even though they don't have any power whatsoever. But apparently for these people, they control the world, and they are the ones that dictate what enterprises do and don't do. This is absolutely wrong. So again, if there's anything that I want my audience to get from it, is that things are sometimes, in fact almost always, more complicated than what they seem at first glance. And we cannot just stick to the main appearance of things. We cannot just stick to what some people said. In fact, I don't even want you to believe me only on the grounds that I said these things. I want you to look at this for yourself. So I'm going to present all my data in the description, and I'm also going to give you the link to Stefan Molyneux' video so that you see that I'm not misrepresenting anything. But his thesis is pretty simple and it's pretty wrong. So there's nothing to misrepresent there. Anyway, I will continue making my series on the classical economy, on classical political economy and so on. And this is just, I felt the urge to make this video, and I will be making more videos criticizing the content that needs to be criticized in the future. So leave any suggestions if you have them, and well, you can support me by subscribing and by clicking like. And thank you for watching. I will see you in the next video.